What are the risks you foresee in the fund?
Ben, okay, good question. I think if you look at the presentation that we had today, we've talked a lot about the benefits and the good things that you get out of investing in a private debt portfolio. So what are the risks that we see specifically to this credit fund? And it's actually quite a tough question to answer because there are risks involved here, and certainly we're not saying to you that this is a risk-free investment, but it's pretty different to the risks you're going to see in an equity investment or a property investment. I think some of the key things you've got to be really aware of here is number one, the liquidity around private debt underlying. So the stuff that we're investing into is pretty low. So you need to understand what that liquidity risk does to your overall portfolios. And if things go wrong, it can take a period of time to work through some of these loans. So that is definitely a risk you need to be aware of. I suppose probably not necessarily the best answer, but the other key thing that we always look at is valuations of underlying securities. So given that we focus very much on investing in loans which have senior security or mezzanine security in some instances, but mostly senior security, it's very important to understand the valuations around those underlying assets and have those valuations been done correctly. So certainly risks that you foresee out there, and these are things that we work very hard to mitigate, are that valuations on underlying security have been done incorrectly, which therefore means that your security may not be as good as it could be around that loan. But it definitely, from our perspective, it's something that we focus on, and we try to prevent going forward. Um, Other key areas, and the place where we had a negative month, even though it was 0.5% down, is there's always going to be a potential where a loan is made into a transaction that could potentially be illegal or fraudulent. And again, we work very hard with our managers to make sure that those types of things don't happen, and you mitigate those risks again by ensuring that you have very strong collateral on your underlying assets.